And starting off with NTPC Green on my list, that's a thumbs up. A subsidiary win bid to develop 500 megawatts of a solar power project. So one of their subsidiaries has won this project. Tariffs are set at 3.52 per kilowatt. Order includes a 250 megawatt and 1000 MWh energy storage system. The letter of award from SECI, that's the Solar Energy Corporation of India, is awaited. So, like I said, some of the order win impact is beginning to be seen in priority areas. So, you will see that in clean energy, you will see that in roads, etc. HG Infra Engineering is the other one that we're looking at this morning. A thumbs up there. The stock had not a great day yesterday. It was down about 0.5%, not massively, but they have received a letter of award worth 763 crores from the Road Ministry. Contract will be executed in 2 years, and they're targeting an order inflow of 11,000 to 12,000 crores for FY25. So that's one I want to watch. The next one I actually found very, very interesting. So Goldman Sachs has a note out on Avenue Supermarts, and which is why we're talking about a brokerage note in this list. They've made a sell with a target price of 3,425 rupees with a 10% downside. They say that DMart is increasing price discounts to maintain competitive advantage. In fact, as deep as 25%. DMart's total addressable market, according to them, and this is, I would say, the exclamation mark point that I saw, is not $500 billion according to Goldman Sachs, but $86 billion. So that's a huge cut down. They see headroom for growth outside top 10 cities, but model is to own stores. So they have cut their earnings multiple by 4% in FY25, 6% FY26, and 6% in FY27. So DMart could have a bad morning, but then that sort of brings me back to my point of, are we at that inflection point where we're seeing an impact of 10-minute delivery and the way people are ordering groceries change? Is it just top cities? Can it impact a company like a DMart?
Could very interesting, and could it bring down growth rates? Could it bring down maybe margins because they have to increase discounts? All of those questions out there. So important for DMart, important for Reliance Retail, important for almost all forms of retail, right? So it will be very interesting. And Tamanna, just before we get to stocks, it brings me to the question on Reliance Industries as well, right? You need the big boy to perform, right? And in some sense, HDFC Bank, Reliance Industries, etc., to perform well. Now, just think of this, viewers, and I don't know what Tamanna's views are, but Reliance now, and retail of all forms, but because Reliance has retail, retail is under a bit of a cloud because of the discounts that the new age tech players are bringing to the table, and what happens to unit margins for the retail business. The telecom business, which is probably the shining star of sorts for most companies because they've gained subscribers massively, what have you. But Starlink, Elon Musk, and what that does, and therefore is there a cloud there? We saw Bharti react negatively yesterday as well, right? So that is the other thing. So that's nearly 1/3 and 1/3. Arguably, I'm just saying, 2/3 of the business having an issue. Is that the reason why Reliance Industries, the big boy, hasn't quite participated? And look at the 6-month chart for a Reliance Industries relative to the Nifty chart, and you will see that the big boys underperformed, and that's not great news from a market watcher's perspective. You need heavyweights to perform well for the market to stay stable. So that is 6 months, 11% down for Reliance Industries.
That's unusual. And then a story yesterday by Bloomberg that they are looking to raise about $3 billion of a loan to refinance their debt. Because they have $2.9 billion worth of debt due in 2025. But having said that, absolutely, till a Reliance doesn't come in and participate, just the IT pack once in a while showing action and HDFC once in a while popping up is perhaps not going to be enough.
Yeah, so that's the problem. Okay, any case, so 2-3 stocks, sorry, I just moved away a bit, but because Tamanna was talking about retail, and it's an important point she was bringing up. What happens to organized retail? But the 3 stocks at my end, one is Awfis, and I presume we haven't spoken about it, but the reason why this is important, normal block deals is okay, but in Awfis' case, investors are going to sell up to 12.2% stake. That's a very large stake that is coming up via block deal today. The floor price is at 680, which is about a 5% discount to closing price. So it's a thumbs down from my end because it's a very large stake on offer. Now, if it gets absorbed well, you might well see the stock react positively as well. But I would suspect that Awfis, and we'll get the graphics up on the screen, But I suspect that Awfis could have a negative reaction today. So do watch out for this one. Could be a bit sluggish. Adani Ports was interesting to my mind. It's a small piece of news, but you don't normally see infra companies coming out and saying that, hey, we don't want money or we don't want finances, debt financing. But Adani Port has said that they have withdrawn the financing request from DFC for Colombo West International Terminal project. Now, this Colombo West International project is in Sri Lanka, was to be financed via DFC finances. Now the company is saying will be financed via company's internal accruals and capital management plan, is on track for commissioning by early next year. It's a small piece of news, but you never know, it might bring out a bit of a spurt, so that's something. And Anushi will talk about it in detail, but I thought it was interesting, so a bit of a thumbs up there from my end. And lastly, I'll take a little bit of time here, but I thought the JM Financial list was very, very interesting. And while we'll probably have somebody come and talk about this entire list, but these are the target upsides for the JM Financial note. And a lot of stocks catch your attention. Maruti 35% upside, KPIT 33, Z Entertainment 40. But I'll choose one stock, Tamanna, and that is why this brokerage note makes it to my list. That is the JM Financial note on BHEL. I thought that was very interesting. So JM Financial has a target price of 371, which is a 49% upside. And the reasons are very nice. They're putting out the fact that they've been consistently bagging order flow, 9,600 megawatt and 10,400 megawatt in 24 and 25 respectively. But more importantly, they have seen a pickup in execution and margins in quarter 2 FY25. So to be watched out that the execution is picking up from BHEL's case. They expect, Tamanna, an EBITDA CAGR of 103% from FY24 to 27. I mean, if BHEL can do that, then a lot of naysayers could turn believers. Let's see if there is a 103% CAGR for 3 years.
You know, that is so exciting right now when the hunt for potential multi-baggers and companies that can perform in that space becomes quite difficult. But yes, so that is definitely one to watch out for. But let's get